Yo, 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 what's up, my people? Welcome to Psychological Sundays. I'm your host, Dr. Scottage, and we're gonna get down to business. So yeah, cognitive dissonance is basically just when you have an idea and then your mind gives you a conflicting idea and now you're not sure what to do. Or you have a plan and then all of a sudden something happens and you get a conflicting idea and you don't want to follow the plan. Like say you're in a buy and you believe it's going to go to 1 to 10. So the green candle comes, green candle comes, green candle comes, you're happy. I'm in a buy, it's approaching my take profit. You basically have no cognitive dissonance yet because you're in a buy, you think it's going to go to 1 to 10 and price is going up. Then a couple red candles come. And all of a sudden, now you're getting or receiving new information that's going against the original plan and your original idea. Now, the red candles and the pullback start to make you feel uncomfortable. And now your brain is trying to avoid that discomfort. So it wants to close that trade. But in any trade, it's going to push up and pull back and push up and pull back and push up and pull back. So, one thing that really helps me is especially with the NQ legacy strategy, is we're really banking on when it comes to our zone for an entry, it to leave that entry spot really fast. So since it's leaving that spot really fast, I'm planning for a pullback later on. I say, okay, if price leaves here really quickly and doesn't pull back, I know it's going to pull back. If it pulls back really soon, I'll maybe try to add a second position in that area. Or maybe when it pulls back, I just won't pay attention. I'll let it do a few oscillations before I start paying attention to the chart again. Um, and I am preparing myself emotionally and situationally for what I'm gonna feel when that pullback happens. I'm not just sitting there hoping it doesn't pull back and then it does pull back and I start getting scared and wanting to make new decisions. I'm telling myself beforehand, okay, it hasn't pulled back yet. It's gonna pull back. What's that situation or what's your plan to deal with that situation when it comes? And so that's what a lot of people aren't doing. They have a plan for their trading, but they're not planning out different situations. So this is what I was talking about. I think it was the second psychological Sunday where I was talking about situational analysis and basically analyzing what you think you're going to think when situations present themselves. It's not just enough to say, I'm going to get in here and I'm going to exit here, because during that trade playing out, you're going to run into different situations. And you need to know mentally what your plan is going to be to deal with those situations as they come up. So I have so much stuff written down for my plan, but it's not too much. It's basically just like, this is what I'm going to wait for. This is what I'm going to do when I get in. This is what I'm going to do when price pulls back. This is what I'm going to do when I get out. And so I already know beforehand how I'm going to approach those situations. I don't just hope, oh, I hope this doesn't happen. And then it starts to happen and I get scared and exit. Because you'll notice so many trades, especially with the NQ legacy, if we're going for a 1 to 10 or a 1 to 20, you're going to have to deal with some opposite candles and some pullback situations in there. So you better be prepared to deal with those properly, or just not watch the trade and let it hit your take profit or your stop loss. Because the moment that that starts doing the opposite of what you're hoping it's going to do, you're going to get scared and close the trade early. And so many of the trades that we've seen a Kano take and close at 1 to 10, 1 to 20, nobody else held them that long. Nobody else, because it started to pull back. People got scared. They started exiting. And when it pulled back, Akano got excited because he got an opportunity to add on. It went to a 1 to 10, 1 to 20. He closed at a big trade. Someone else closed at 1/8 of that amount. So that's all it is that when you're in a trading situation or a situation at all and you're getting conflicting ideas, to know how to deal with that and to be prepared to deal with that. I was just going to it's kind of on this same thing, but not really. I was mentioning to some guys that I was gonna share uh a reason for some of my big losses that I've noticed over the history of my trading. And I've whenever I followed the strategy and had a set stop loss and that stop losses got hit, I've never had one of my big losses. My big losses have only come when I've had a plan and I've got different information and I've started doing stuff that was semi-random. So, for instance, a big loss would come when you think you know it's going to go up from here and you just enter a buy. You have no data to back it up. You have no plan, no strat, just whatever's happening at the moment when you're watching the chart, something inside you says, "I know it's going to go up from here." And you enter. And then it starts going against you and maybe you move the stop loss down because you think, okay, I know it's going to go up from here, but maybe my entry wasn't the best. So maybe you add on, or maybe you move your stop loss down. Those were always my big losses. Doing random things like that aren't a strategy, they aren't a plan, and there's no data to back them up. So that's why I say I just like to run this thing like a business now. The strategies I trade are more mechanical. They're more like if this, then that. If price comes here and does this, then I'll do this. Just trying to take my discernment and my decision making out of the process because it's a lot easier for me to feel confident in the data when mechanical. It's hard to, for me anyway, it's hard to have backed up data for my just split second decision making. So I try to just keep my trading to mechanical processes where I can back test the data and I can forward test the data and I can keep everything in such a way that hopefully one day I don't even need to be the one doing it. If I have it dialed in like a total business, like McDonald's has a business. Someone comes up to the drive-through window, they look at the thing, they see Big Mac is a number 4 combo. I'm just gonna mute Rudy. Hang on a sec.
My bad, bro. I'm gonna mute myself. Sorry.
Thanks, Rudy.
You know what it is? Because it just came in off the phone call. Sorry, guys. Sorry.
Yeah, yeah. But yeah, so like McDonald's, for instance, the reason they've been able to become one of the biggest businesses in the world is because they have a tight, refined mechanical process, and they follow that process all the time. If someone comes up to the drive-through window, they say, "I want a number 4." The person says, "Okay, would you like fries or Coke with that?" They say, "I want fries and Coke." "Okay, come to the next window and pay." The person drives forward, pays the money at the next window. They drive to the second window. They get the food in the back. The process for making the food was the same as it was for the last time someone ordered a combo number 4. And since they have this repeatable mechanical system, this is what's allowed them to build a big business. So if you want to build your trading into something much, much larger than it is now, you have to find a way to get it to be much more mechanical because yeah, you might be able to profit from just your decisions in the short term, but if you want something that you can really have confidence in, I find if the more mechanical it is, the more that you're confident in it and the less emotional you are. Because even if you take a loss, you can look at your data and you can say, okay, this mechanical system, it loses 4 out of 10 times, it wins 6 out of 10 times. So if a loss is in the process of happening, I don't really care because I can see here that losses have to happen in this strategy. So I just let the losses happen. I don't change anything. I don't worry about anything. I just keep going. The next time the setup presents itself, I take the exact same entry. And if it's one of the losses, it's one of the losses. If it's one of the wins, it's one of the wins. Great. Move on. So yeah, I just wanted to share that with you guys because some people still and it's one thing if you're a really experienced trader and you have grandiose decision making skills and you know the oscillation of the market and you know you can trade with discernment. That's a different thing, but most people that are starting out or they're not profitable, they shouldn't be trading based on their decisions. They should only be trading based on their mechanical system. And the truth is they all want to be more disciplined individuals and they all want to be people that do what they say they're going to do. And so following a mechanical system day after day helps with that just in general in life, not just in trading. But if you start to become the person who does what they say they're going to do, that will work out for you in every area of life. So I'm just going to scroll down here. And yeah, we'll talk about a few different things today. These are some trading truths that we'll go over. This trade doesn't matter. This is one thing that I had to really tell myself in the beginning because I put too much pressure on each single trade. Each individual trade isn't as important as the result of 10 trades is. When we put too much emphasis on the importance of each trade, it just makes trading much more nerve-wracking. And so I started to realize if I look at groups of trades, 10 trades, 20 trades, I like 20 trades. If I look at everything in groups of 20, I don't know which of those 20 are going to be winners and losers. I just know some are going to be winners, some are going to be losers. So I can let the wins and losses happen and work themselves out through the 20 trades. But when we're just looking at it on each individual trade, we put way too much stress on it. Uh, we put way too much stress on it. And then it becomes hard to follow the process over an extended period of time because sometimes we'll look at one single trade and we're like, this trade's got to work out. I need it to pass my challenge, blah 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 blah. It's like you're putting so much pressure on that. You're putting so much pressure on that single trade to perform that there's going to be the opposite thing if it doesn't perform. If you're really putting a lot on it to perform and it doesn't perform, you're going to feel really bad. So I don't put any pressure on any single trade to perform. I really don't care if it performs. The only thing I care about is that I get some opportunities next week. I don't really care which ones work and which ones don't because I know some are going to work, some aren't. But I need opportunities. If I don't get any opportunities, then I can't have winners or losers. So I need opportunities that fit my criteria. But as far as which ones are going to win and which ones are going to lose, I don't know and I don't really care. And that's why for some people too, it's like an emotional roller coaster all the time of up and down because they're getting so emotional upon one single trade and it's always going to be that way and it's always going to be nerve-wracking and it's never going to be feeling like success or feeling like a real business because it's gonna be too up and down, and you're really not looking for that emotional roller coaster, and the point of trading is freedom. The point of trading is to not have to work a job. The point of trading is to not be stressed out. The point of trading is to have financial abundance. So you don't wanna be putting yourself into mental situations where you're not free, you're trapped. Your nerves are shot and you're stressed to the gills. We don't want that. So if you look at groups of 20 trades, or you write down on a piece of paper trade 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, blah blah blah, all the way to 20, let the next trade happen and write down on there whether it was a win or a loss. Make sure you follow your plan to the T. And then if that was a win or a loss, who cares? You just look at it and you're say, okay, we got 19 more to go to see what happens. So just let it happen. But a lot of times people put so much stress on one trade. When that trade loses, they enter now a random trade right after to try and make back those losses. And a lot of times that random trade they enter, it either isn't following no strategy at all, or it's a crappy setup. Like they'll have an A setup that they'll pass on, or an A setup that will hit stop loss, and then all of a sudden they'll trade a B, C, D, or F setup to try and make that money back. And then of course that one will lose. It's way worse. And then they're on this roller coaster of taking losses. So if I get a single loss, I don't really care. So like some of the strategies that I trade, I only get one opportunity a day. If it happens, it happens. If it doesn't, it doesn't. So if that trade fails, there's nothing I can do till the next day. That strategy only provides me one opportunity a day. So there's no way I can chase it. So I have to let it just happen and go on to the next one. So yeah, a lot of times with people, they're they're feeling hectic and they're not um they're not feeling emotionally stable because they're just putting so much emphasis on one trade. So if there's anything I can recommend is to write down on a piece of paper 1 to 10 or 1 to 20 and just let the trades happen and don't get emotionally involved. Just let the trades happen and say, you know what, I'm just going to see what happens for the next 20 trades and then we'll come up with a decision after that. This is another trading truth. I don't know what will happen next. Unless you have access to the people who are actually moving the market, you don't actually know what will happen next. But you don't need to know what will happen next to make money. To make money, you need to follow your proven system. So this is something that I was wrestling with in the start. I always thought that I always thought that I needed to know.
Yes.
Oh, let's mute Rudy again.
Sorry, bro. I'm gonna mute
I
myself.
always thought that I
Sorry.
needed to know what will happen next. And the truth is, to make money, I don't need to know what will happen next. I need to follow my system because it has a proven success rate and a proven profitable risk to reward, and just let that work out. The worst losses that I've had have been because I thought I knew what would happen next. The worst losses I've had is when I thought it was going to reverse from here, so I'd enter a trade and then it wouldn't reverse. And then I convinced myself somehow that I still knew what was going to happen and it was still going to reverse from here. So I would try again in another spot, try again in another spot. And this would really cost me a lot of money. So being convinced you know what will happen next is a real flaw, and you need to just let that go. Even if you're at a higher time frame order block or higher time frame PD array, a higher time frame fair value gap, you saw liquidity get swept, you still don't know what will actually happen next. You have a pretty good idea. You have maybe a 90% probability of something happen, but you don't actually know. So once you stop thinking you know what's going to happen, it really helps because, yeah, like I said, my biggest losses have been when I've thought I knew what was going to happen, and then I got attached to that idea or attached to that bias, and it really cost me a lot of money. So, yeah, I don't know what will happen next. That's a good trading truth to hammer home. Here's another one. Don't close the trade early, and maybe don't even pay attention. So you don't close your trade for a loss early, so why would you move your take profit? If I stare at it and watch the trade, my brain will try and find a way to convince me that I need to get out. Because in a trade, even if it's in the profit, your brain will say something like, "We don't want to lose this profit. Just get out now, secure this money." Or if the trade's going into a pullback, it will say, "Oh, it's pulling back. The trade's going to hit stop loss. Just exit here." So if I stare at and watch the trade, a lot of times that's why I will exit early. I prefer to really just set my stop loss and take profit and let the trade play out. Sometimes what I'll do is I'll set my stop loss and take profit. Then I'll set an alert somewhere on the chart, maybe halfway to take profit. And when that alert goes off, then I'll close out some of the trade. But if that's one of my strategies that has that plan in it, then that's what I'll do. But yeah, I prefer not to look. Um, and I'll explain why right here. So, why am I watching it and why am I moving anything? If the stop loss is at a level of idea invalidation, then it should stay where it is. And if the take profit is at a reasonable and planned level, then it should also stay where it is. So the point of a stop loss is basically to say, if it breaks this low, my idea is no more. My idea is shot. So why would I move the stop loss? The stop loss is at that low. If it goes below that low, then this idea is kaput. Forget this idea. So I shouldn't move it. And if I have back tested data to say these trades always hit a 1 to 4 risk reward, or these trades always hit a 1 to 2 risk reward, and my take profit is at 1 to 2, why should I move that? I should just let it play out because what's going to happen is it's going to start playing in your favor, and then it's going to start going the other direction, and you're going to close that trade so early. And not only are you closing the trade early and taking less profits, you're programming your brain to think it's okay to mess around and to tinker. It's not okay to mess around and tinker because that's not your plan and that's not your strategy. McDonald's doesn't tinker and mess around. So they don't, when someone orders a Big Mac, they don't start adding new ingredients and change the price before the person gets to the till and do all this weird stuff. They don't do that. They just follow their system every time. So we'll read the fourth part here. Take partials if it's part of your plan, but don't get in the habit of fiddling around and messing with trades, because then you're not following a plan and you'll never be consistently profitable if you aren't following a plan. And that's why I keep talking about the same thing basically in all the sessions is it's building a business. And when you're building a business, you have a business plan. And when you have a business plan, you have to follow that plan, especially when you have investors, you have shareholders, you have employees, you have other people's families relying on this money. They're relying on you following the process. So you can't all of a sudden come to the office and start doing random things because it's other people's livelihood on the table. So this is what I like to say with trading is that the moment you turn this into a real business and you start following your plan with no no margin of error, basically like you don't give yourself any chance to do something random, that's when it will start working for you and you'll start being consistent. Go down to the next one here. Pullbacks are inevitable. So we talked about this before, but we'll go over it again. It is going to do some pullback at some point, so plan for it. Plan what to do when it happens. Don't just hope it doesn't pull back and then get scared as soon as it does. It isn't going to just go in one direction for a long time. So chasing it with a tight stop loss is just going to result in getting stopped out. So that's another thing that people do too, is that the trade's going in profit. They got their stop loss way down at the bottom and the trade starts pulling back and they just go real tight with the stop loss. Like, well, you can't go one candle away with the stop loss in most situations. You can't just go one candle away with the stop loss. Price has to pull back and usually pulls back to sweep liquidity at an intermediate low or something. So it's just going to take you out and then keep going. You don't want to do this. This is just scared trading. The only reason you would do it is because you're scared to lose the profits or you're scared that the trade is going to come and hit your stop loss. So at that point, you're no longer trading the chart. You're not trading NASDAQ. You're not trading gold. You're trading your emotions and you're trading what you think is going to happen. And you don't have a strategy that is based upon your emotions and based upon what you think is going to happen. So you'll start to find that, oh, half of the time, I'm actually not trading my strategy. I'm trading my emotions, I'm trading my ideas, or I'm trading my account balance, or I'm trading how close I am to passing this challenge. So you think you're trading the chart, but if you really looked back and journaled, you'd be surprised at how many times you're trading something that's not the chart. This is my final one here, process over profits. So profit is just a byproduct of an implemented plan that has a positive expected value and a positive risk to reward. In trading, money isn't made. Decisions are made and money follows those decisions. And that's why we go back to the thing we've always said, if this, then that. So in a real business, they always have if this, then that. If a customer calls, then we'll say this. If they say yes, then we'll do this. If they say no, then we'll do this. If maybe if it's 8 o'clock in the morning, then we will open the doors to our store and let customers come in and buy stuff. Maybe our business is we're tile setters. So we go in and we say, if the subfloor is wonky, then we'll put in a new subfloor before we start the tiling. So it's always a process of if this, then that. And the more you can get clear on what your if this, then that is, the more that you'll have a real solid business strategy and you'll be able to deal with any situation. People that are cold callers, they call people at random every day, but they have in front of them a list of objections. So anytime they're cold calling someone and someone says some sort of objection, the cold caller says a response to it that they have predetermined before the person has said that. So they have a if this then that plan for all the objections that people are going to have. And that's the way they can convince people to buy stuff over the phone. It's because whenever someone has something to say, they have a response already predetermined that gets successful results. They have a script made that they know is their strategy basically, and they know this script provides results of X amount. So if we cold call 100 people, this script sells 5 people out of the 100 people. Every 100 people we call, 5 people buy our product if we do this and we say this in this way. So then they just start picking up the phone and calling as many people as they can because they know every time they make 100, 5 of those would have been sales. So that's basically all trading is. You don't know which ones are going to be the sales and which ones are not, which ones are going to lose and which ones are going to win. But you know, if you keep taking them, the wins are going to shine. It's the same as poker. You don't know if you play pocket aces if it's going to make you money the next time you play it, but you know that it has a positive expected value. And if you got to keep playing pocket aces, you would make money with it. So I'll just ask if do any of you guys have any questions or anything you'd like me to go over? Um, that was just a few things that basically I thought of over the weekend that have really helped me. No, no, no. So yeah, my main goal is just to help people realize that you're a lot closer than you are. One one thing that helped me is I realized that I was doing too much. So I thought that I didn't know enough and that I wasn't doing enough, but I was actually doing too much. All of those things that ended up being losses, if I didn't do those, I would have still had that money. So was it really more I needed to do? No, no, it was less. So there's people like this, for instance. There's people, they don't know anything about order blocks, fair value gaps, none of that stuff. All they do is go like this. When price goes like this, they draw a rectangle here, they draw a rectangle here. If price does this and rejects off, they take a buy, stop loss below here. Take profit up here. They're just trading the flow of the price and the structure of the market. This is support and resistance. And you could say, oh, this is a breaker block overlapped with a fair value gap. They're pulling back, it's below 50%. Some of these guys don't care about all of that. They know that they don't need to know all that to make money. So there's so many people that think, oh, I need more information. Oh, I need another course. Oh, I need to know more about this. Oh, I need to know more about that. You probably have way more than enough information to make money. But it's what you're doing with that information that is the reason you're not making money. So people think knowledge is power. No, it's not. There's knowledge and information everywhere. There's YouTube, there's Google. There's knowledge is not power. Knowledge is potential power. It's all about what you do with that power. Yeah. So if you apply that knowledge, that's when it becomes power. If you use that knowledge in the wrong way, it's going to cost you money. So some people think, "Oh, I need to know more. I need to know now supply and demand. Oh, I need to know support and resistance. Oh, I need to know Ichimoku. Oh, I need to." No, you don't. No, you don't. You know more than enough. You need to stick to your plan and you need to do something that you can consistently make money with. It's a trick of the school system to always make you think you need to seek some other higher form of education to get you to your destination. Some of the people that have the most wisdom and most knowledge don't make money. A teacher at a business school doesn't run a business. They know all the information about business, but they've never even run a business. Then there's people going to school paying these guys to learn how to run a business from somebody who's never even run a business. What a scam is this? Right? But they have tons of knowledge, but they don't run a business. And you'll see this in trading a lot is that people some of the 95% of traders that lose money, some of the traders that lose the most money, they know the most about trading. They know all the different terms and all the different things, but they don't know how to manage losses. They don't know how to deal with their emotions. They don't know how to be patient and wait for entries. So, who cares that they know about order blocks? Who cares they know about fair value gaps if they have no patience, if they have no plan, if they have no uh, strategy that they're gonna do every day, no matter what, they're not gonna make money, right? So, but these guys will tell you everything. They'll mark up and analyze a chart. You could watch these guys for days. They'll look at this and da 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 da. They'll find you all the confluences, everything in hindsight. But then you ask them to take a trade to make money, and they'll just lose money, lose money, lose money. And it's like, why are they losing money if they know so much? Because knowledge isn't power, and knowledge does not put money in your pocket. It's all about what you do. There's people that have way less knowledge, but they do something with it. Like you could have two plumbers, you could have one plumber that knows a lot of information, but all he does is sit on his couch all day. And you could have another plumber who only knows half as much information, but he put out a book with that information and now he's making money off the information. So the guy knows less, but he's making more money. So that's a real big thing too, is to get out of the mindset of thinking you don't know enough and to think that, hey, maybe I already do know more than enough. And hey, maybe I'm doing too much. Maybe I just need to be more patient. Maybe I just need to wait for more confluence. Maybe I need to not ram it so much and be trying to make so many trades. The less trades I make, the better it is. The better my profit and losses, and the better I feel. So yeah, just remember that, guys. Knowledge is not power; it's potential power. It's all about what you do with that knowledge. And I'm sure all of the people in here, I'm not going to say a lot of the people in here because this group is pretty tight now. It's only 113 people, and we all came from Kinzo's group. We all already knew enough to find Kinzo and to be searching for what we were searching for when we found Kinzo. We all have more than enough knowledge to make money. Now's the time to do what you know you need to do with that knowledge to start making money. And I'll ask again, any questions or anything you guys want me to go over? Oh, Jay Money asked if I could put a pic of the checklist I have. The checklist I have is actually in the real world, and so I like have stuff written down at my trading station because I want to see it right in front of me. See, nowadays we use too much digital stuff, so I'm not. I like journal in an actual book. There's some power that comes from using your hand to write something out and taking ideas and stuff from the mental world and digital world and bringing it into the real world. So yeah, you need to find what your let your soul talk to you. You know what you need to do and you need to not do. It's the weekend right now. Before the new week starts, just sit down and quiet and say to yourself, what should I do? What should I not do? What was that stupid thing last week that cost me the most? I'm going to just this week not do that. What's my plan going to be? What am I going to do? It's great for someone else to tell you what they would do, but you're not someone else. Now's the time to find out what you need to do, what kind of business you need to build, how you need to be acting and responding to situations in the market. There's nobody that can get you to your destination except you. This is something that I was missing too in the beginning. I always wanted everyone to do it for me. I wanted everyone to figure it out for me. I wanted them to give me a secret sauce. You know what the secret sauce is? Risk management, sticking to your plan. That's the secret sauce. Is is staying alive long enough to actually have the money to put on the table when the good trade comes. So now's the time. You got to figure out for yourself, what do I need to do? You already know. Inside, you know. There's something inside you that will tell you, a quiet, still voice that will speak to you, letting you know you should do this and you should not do that anymore. Anyone else got any questions?
For that. Can you hear me?
Okay, yes, I can.
So, and well, I found out I used to be so fearful about jumping in a trade and when to jump out, and then finally I found out that once I do use, well, first of all, you got to understand what you said earlier. You are going to have losses. That's just a part of trading, and
Hmm.
so I did get that part. But then afterwards, this young kid told me he trades, and he told me he was like, when you set your stop losses and you have your risk management in place, he said that'll take away that fear. And I'm telling you that that was one of the best things that I learned about trading, having that risk management in play. You know,
Hmm.
you
Hmm.
know, knowing your strategy, have a trading plan and having the risk management. That's it
Yeah,
right there.
yeah, yeah.
Right
And I
now, I'm
think,
just trying to learn this strategy. This strategy, once I get that, I know I'll be in good shape, from here forward. But having that trading plan, that's it right there. That's the key.
yeah, and I think, like you said, once you set that stop loss and you set that take profit, that relieves some of the pressure. But I think what the problem is that they put too many dollars on the stop loss and they're afraid to risk that amount. It's like if you're not comfortable with that size loss, you need to scale down. You just need to. You have to be comfortable with taking that loss. But a lot of people, they don't want to hear that because they're like, "Oh, I don't want to trade less than that." It doesn't matter what you want to do. What you want to do is usually the wrong thing and costs you money and costs you all sorts of stuff in life. You can't do what you want to do anymore. You have to do what you need to do. You have to. Like there's people, they want to run before they can even walk, and then they trip and smash their face on the ground and wonder why they're bleeding all over the place. They want to run right away. Some of the people, they have they have they've never traded any sort of strategy or anything consistently yet in trading. They have never traded even they've never made $20 trades over and over and over again. They've never proven any consistencies to themselves and they've never stuck to anything. But now they all of a sudden want to risk $500 a trade and make $10,000 in a day. It's like, what gives you the right to even think you deserve to make 10,000 in a day if you haven't stuck to anything? You haven't even proven anything. You haven't even, right? So all of a sudden, like, and you see this with people, and then they lose it. So like people will be up $4,000, $5,000, and then they'll lose the whole 4,000. It's like because you don't know how to manage that amount of money. There's a quote that says, if someone gives you $1 million, you better become a millionaire quickly so you can keep that money. Right? And this is what we have. We have an epidemic of people that are all of a sudden buying challenges. They've never dealt with 50,000 anything, not even 50,000 pennies, nothing. But now all of a sudden, what? They think they're in a position they can handle $50,000 account and they are going to be able to properly manage that. Akano went from like $500 account, $5,000 account, $10,000 account, $10,000 account, $10,000 account, 20,000, 20,000, 50,000, now 50,000, now 100,000, now 150,000. There's been so much process to get to the point where he's at now that he grew into this place. But now then people join his group and they want to mimic and do what he's doing without all the early part of the process. You can't just jump in and now all of a sudden think you're going to do what this guy's doing if you skip all of the middle steps that he is doing. One thing that really helped me was just starting with a tiny, tiny account, like $100 account. Risk $10. You're going to have no emotional attachment to that $10. Risk it, set the take profit, set the stop loss, let it hit, record the trade. Next trade, risk $10, set the stop loss, set the take profit, let it hit. Next trade, boom, 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 boom. All 10 trades for the $100 and see what happens. Write it down, and you'll find that you can already make money. You can already be consistent. You can already catch enough winning trades to be making money in a week. But since you're doing it in a different way with a different account balance, you're just messing with the whole system. So when I started doing it with tiny, tiny accounts that I had no emotional attachment to, that's what gave me the confidence to trade the bigger accounts. I could see when I trade the smaller account, oh, look right here. I got 10 trades written down. This is the ones that worked out. This is the ones that didn't. And this is the profit that I made. Now, if I follow that same exact plan on a $50,000 account or a $500 account or a $3,000 account, I have the confidence to just let those losses hit, like the losses on the paper here, and let those winners work themselves out and make up for the losses, and I'll make money at the end of the week. But some people want to skip all that. They don't want to scale up. They don't want nothing. They just want to go right to a 100K account, right to a 150K account, and then wonder why it's all weird for them. It's like it doesn't really work that way. You gotta you got to prove to yourself that you can be the person that sticks to the plan and does what they say they're going to do and can get consistency because of that. Or you're never going to feel comfortable placing a trade because it could go any which way and anything could happen because you could do anything with it. So I'm telling, like, this is what people, they message me and they ask me, like, they'll get a brand new challenge of 100K. They'll message me and they'll say, how quickly can I pass this challenge? How quickly can I get a payout? And how much payout can I request? Just by those three questions, I can tell that they have the wrong idea of what's going on and that they're on the wrong track. They're only focused on the outcome. They're not focused on the process at all. They ask me, how quickly can I pass my challenge? I have no idea because I don't know what you're doing. It might take you 3 years doing what you're doing. I don't know. Then they ask me, how big of a payout can I get? That's dependent on you. I don't know. What's your process? And then how quickly can I get a payout? Again, I don't know what you're going to do. If I say, oh, you can get a payout in 5 days, well, being me and doing what I do, but being you and doing what you do, I don't know. But they're only focused on the outcome. They're not focused on the process at all. This
Brother.
whole
So
game and McDonald's and Home Depot and every other big business, even Smash's door factory, it's all based on the process. They just follow the process. They show up every day, They follow the process. Next day, follow the process. Next day, follow the process. Next day, follow the process. And then the results and the outcomes come because of that. It's all about the process. So right here, we have process over profits, but it could really be like this: process over outcomes. And you'll find anytime you're focused on the outcome, you're going to be in trouble. Anytime you're focused on the outcome, you're going to be in trouble. I don't care what it is. If you're not focused on the process, it's not going to work for you. So even when you bake a cake, the outcome is the cake being perfect at the end. There's no point in focusing on that. Just focus on, do I have the right ingredients? Do I have the oven preheated at the right temperature? Did I mix the ingredients properly? Did I do all the stuff? Then the outcome of a good cake is inevitable. It's not random. It's a recipe. You got to follow it, right? So anytime you're focused on the outcome, you're going to find yourself in trouble. And that's what I was missing. In the early days, I was always focused on the outcome. What's going to happen with this trade? What's going to happen with this account? Blah, 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 blah. And now I'm just so about the process. I'm like, oh man, if I just follow this process, then the outcome's inevitable. If I tighten up this process more and I stick to it even more, the outcome is even more inevitable. It's even going to be bigger and better than I can imagine. I don't got to focus on the outcome or worry about it because I got the process here. But yeah, I know some of you in the group, you don't need to hear any of this at all. And some of you need to hear this over and over and over again. After this, I'll probably only do one more of these Sundays because I'm just going to start repeating myself at this point. But the next Sunday is going to be what I call the final boss. And it's basically like, yeah, it's basically goes like this. We have, I think this is the fourth Sunday. Yeah, this is the fourth Sunday. And then next Sunday will be the fifth Sunday. And we did 1 or 2 Sundays with the Kano. So we've gone over all of the information. The final step is just to get over you. When you can get over you, the sky is the limit. The sky is the limit. The only difference between you and anyone else is it's you and somebody else. If you think and act the same way as someone else, you'll get the same results somebody gets. But if you think and act like you act, you can only get the results that you're getting. So next week's session is going to be eye-opening too. And like I said, I call it the final boss because when you start to get to the level of really leveling up, you stop doing what you want and you start doing what you know you need to do. So I challenge you guys this weekend before next week starts, write down on a piece of paper, what do I know I need to do? And next week, do that no matter what. There's nothing to think about. There's nothing to decide. When a trade's happening, you just follow the plan. Checks this box, it checks this box, okay, I get in. It doesn't, I don't get in. There's nothing to decide. It's your decision making that's costing you the most money.
Scotty.
Yeah, I'll just anyone else got challenges? Rich boys?
Can you hear me, Scotty?
And yeah, there's some people that have already been so close to hitting their goals in these groups. So close, so close. The only thing that was in their way was them. And so right before they hit their goal, they got in their own way and messed it all up. And that's what we all do. That's what we all do. We're like we're our own worst enemy, right? And we all know it, but when you accept that fact, then you stop putting yourself in a position where you can get in your own way. I have a plan to get in because of this reason, and I have a plan to get out because of this reason. When that trade's happening, I don't care what I think all of a sudden. I don't care what emotions pop up and tell me what to do because I know they're lying. I know they're just trying to trick me into making some emotional decision that later on I'm going to regret. So I just let them happen. I'm like, hey, this isn't part of my plan. And all I care about is following my plan now because I want this to be the biggest thing ever. I'm trying to be one of the biggest traders, best traders in Canada where I live. At least, maybe not Canada, but at least on Vancouver Island, the island I live on. And I'm thinking, okay, if I want to be the best trader, what does that look like? What would the best trader be doing next week? Would he be following his plan or would he be doing something random? How would the best trader be managing his emotions? How would the best trader be dealing with his profits? How would the best trader be controlling um, his narrative when something's happening? So, and this is what we help people with in the group is that we show them, hey, if you're in a trade, don't look at your top step dollar amounts. If you're in a trade and you're focused on the dollars and top step, you're going to do something weird and random because you're focused on the wrong thing. When you're in a trade, just look at TradingView or don't even look at it at all. Because yeah, you want to see what's happening with the market. So you can watch TradingView, but if you start to watch your account balance, you're just focused on the outcome and it's not going to end well. And a lot of these people they're in the NQ Legacy group, they get really good trades with the Kano, but then they're out 1 to 1, 1 to 2. And they're like, yeah, I secured 50 pips. It's like, that's great. Yeah, I secured 20 pips. Okay, that's great. But that's not your plan. And if you start not following your plan, you're not going to get too far in this game, right? But they don't realize, and then they miss the 1 to 10 or the big move, and like, oh, I can't believe I missed that. Well, what do you mean you can't believe it? Believe it. You exited the trade. How could you have stayed in if you exited? But once you start to take ownership and you realize, oh, the only reason I exited is because I told myself this scared story. Then when that scared story happens next time, you won't respond to it and you won't take action because of it. So yeah, that's basically it for today. Like I said, this is going to be one of the last Sundays probably. Next Sunday, we'll do it the same time. And yeah, if you guys have any questions, feel free to ask me.
Thank you, brother.
Yeah, much love, bro. You're very welcome.
Have
What
a killer week.
Yeah, you too. What did Rudy say here? A wise man told me, write the goal down. Also the process to reach the goal. Then remove the goal and focus on the process. Exactly.
Yeah, Scotty, I learned that
Exactly.
from you,
Just the
mate.
process. Yeah, Rocky, you got this, bro. You're gonna kill it. You already are killing it.
Trying, brother. I got a lot
Yeah,
of work to do. That's what I'm
yeah,
studying. I'm at a coffee shop right now, trying to get some chart time in for the day.
yeah, perfect.
I was back testing yesterday, also,
Mm,
so we'll see what happens.
yeah.
Gotta get on your guys' level, man.
I find too what really helped me get to the next level was saving the screenshots.
The screenshots.
Yeah, like if you make your own Telegram, I don't know if you use Telegram, but if you make your own Telegram, like your own private group, upload all the screenshots you saved. There's my setup, there's my setup, there's my setup, there's my setup. And now before a trading session, you can just go on your own Telegram and you can see 20 versions of the same thing happening. That will give you confidence to take the trade and to be able to hold it to the full TP and all that stuff.
Okay. Yeah, I'm trying to just get really good at not getting swept out. Like I swear I'm like the king of like sniper, like getting swiped out by like half a pip.
Oh, I know it's the worst too, eh?
I'm a sniper king with that the last couple weeks. So I'm just
Yeah.
trying to not ignore some like equal lows and equal highs. So do you have any? What can you suggest for me? Obviously, there's videos here. Is there anyone on YouTube that does a really good explanation on that? Like that you can recommend me? I can study some stuff today on.
Not really anything I've found, but what's helped me is I just think, where are the obvious stop losses? And it's like, I don't want my stop loss there. Even if it makes sense, it's like, I gotta wait for it to sweep that level,
Okay.
you know? And sometimes I think like if I get into the charts, I say, like, let's go. This chart will look really weird because it's a South African Rand USD. Here, let's go to a different chart. Go. Let's go. XAU USD. So if I got on the chart here, I would a lot of times look at the chart and I would say, who caught the move and who's in profit right now and where's their stop? Because that's going to
Okay.
be the closest target, right? Is whoever's in the trade and celebrating right now, you know, if you were in the trade and you were celebrating, it's going to come for your stop loss.
Right. Right. Right.
So if you start thinking like that, and this is what I've helped people in the one-on-ones with, where are the stop loss? Then it becomes a lot more obvious that you're like, oh, I can see that. And I used to put smiley faces on my chart. Like I used to go like this. I would put like there's people that caught this buy right here. You know, they caught this buy right here, and they have their stop losses right below that low.
Mm-hmm.
Right? There's people that,
Smiley face.
yeah, because that smiley face is going to turn into an anger face. And there's people that caught this sell, and they're stoked, but now they're sweating because price is creeping back up top.
Mm-hmm.
Right? So you know that that's where their stop loss is. One of my main ways to trade before, when I wasn't really trading any type of strategy, it was just something I made up. All I did was go like this. If the market opened right here at uh, say this is 630, this line is 630 when the stock market opened, right? So this was on NASDAQ and US 30. Say this is 630 when the market opens. If the market did this before market open, what do I know? I know that there's people that caught this trade that are really happy right now, and they're they're thinking they're geniuses, right? And all their stop
Yeah.
losses are right here. So many times New York would open, and then it would just go and it would start taking out all of these stop losses.
And then make it real.
Yeah. And then it would diverge somewhere and flip around, and it would do the same thing because there was now stop losses at these areas. So price is basically just always seeking liquidity, right? It's either building liquidity or going to liquidity. So if you start thinking of it in that way, you start thinking, where's the obvious stop losses? Then it will help you a lot from not getting targeted, because you'll notice a lot of times you'll get in and you'll want to put your stop loss in the area where a lot of people already have their stop losses.
Mm-hmm.
And then it's just going to sweep you out, right? It has to.
Right. Okay.
But
All
yeah,
it
there's
is,
That's like
no.
my
fear with it. That's all it is. Just losing that fear, man, of
Sorry, go
missing the.
on.
I was just saying that's all it is. What the why we would put our stop losses there and try to jump into the trade, because it's just fear of missing the trade. Do you get what I'm saying? And that's all
But
it
yeah,
is.
that's something that's helped me, is to not just think where's it going, because you'll want to think, oh yeah, like in this trade, you'll say you'll want to think like this, oh, it's going up, right? And your brain will be like, yeah, it's going up. Well, before it goes up, it goes down, and before it goes down, it goes up. So that's the only way it can move, because the big institutions, if they want to take a buy, they need to get it at a better price than it is right now. So if they want to buy right here, where are they going to buy from? Either below this low or below this low here. They ideally want to buy way down here. But if they're going for a short-term trade, they just need to get it in cheaper than it is right now. So anytime they want to buy, they have to wait for it to sell first. And anytime they want to sell, they have to wait for it to buy first.
perfect.
There's a thing I call the scary buy. So like most people want to buy after an up candle comes and they feel like FOMO. So they'll want to buy after, like, let's switch the candle colors.
I'm sure that happened a lot with gold this week. Like a lot.
Yeah, exactly, right?
Got swapped out. Yeah.
Yeah. And so what will happen is they'll see uh like a green scenario happening and they'll want to buy. So they'll wait for confirmation, right? So they'll be like, okay, now it's really pushing, and they'll get in a buy like right here. Bad spot to buy, right? Or they wait for it to sell a bunch and then they'll get in on a sell somewhere like right here after they've got a bunch
Right.
of candles of confirmation. So you only want to buy really after red candles, and you only want to sell after green candles. Which becomes weird because, like, for instance, right here, this is called the scary buy. So it shoots down red. Your emotions are telling you sell. It's not telling you buy. Your emotions, it's easy to look at this and say, yeah, I'd think of buying down there. No, when this big red candle happens, your brain is telling you FOMO, I missed the sell. That's exactly what your brain is saying. FOMO, you missed the sell. You wish you got in here. You missed it. Blah, blah, blah. It's just going to keep dumping down. But in a Kano's group, we call that the scary buy because that's obviously the best place to buy. Then price goes up after that. And you'll find this happens a lot when it's coming back to your order block. So like price will be doodling around like this, going up, and then you're waiting on a buy. You're waiting on a buy from maybe this area down here at the order block. You're waiting for a buy right here. And then what does price do? Price goes like this. Oh, let's do it with the block. So then price does this, coming back to your order block. And then all of a sudden you're scared to get in at this order block now because it's just solid red candles. And you're like, oh no, it doesn't seem like a good buy anymore. It looks like it in hindsight, looking at this pattern, like, yeah, it still makes sense. But at the time, your brain won't. Your brain will be like, I don't want to buy. It could just easily go like this and bust straight through this order block. So you won't buy there. And then what will happen is you'll get some sort of,
It takes off.
yeah, or you'll get some sort of rejection out of it. And then now since you have some confirmation, you want to buy right here.
Right.
And then it's like now you're getting in at a way worse price, and now your stop loss has to be all the way down here. Your stop loss has to be all the way down here, and now you have to target this huge amount just to make it profitable, when actually you should have been entering somewhere down here, but you got scared because of these candles. So they love to scare people with this. We call this the scary buy. I talk about this trade all the time. and it happens because it will come back down and people are scared, and maybe they caught the buy. Maybe some people caught the buy from right here and they're in profit, right? They caught the buy originally and they're in profit, and price shoots down and then they'll close their original buy at break even or whatever. And they're scared, and somebody else is capitalizing on that. So sometimes a Kano is in a buy, it shoots down, everybody closes their buys because they're scared. A Kano gets excited because it's coming back to an area where he can add on, and he adds more positions there. And then it goes up 1 to 10, and he's made $15,000, and everyone's like, man, oh, and it's like, it's because you're trading your emotions that when you had price come back down, you got scared and thought, I better get out at break even. And Akano was excited, the opposite emotion, and he thought, I better add on.
Yeah. 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 Damn.
See, it's so psychological, right?
It is, and that's probably where before this group, what made me such a horrible trader is I was getting those late entries, and then I was just getting taken out on the pullbacks. Like, I don't know, it was just a vicious cycle.
Yeah. And that's the thing with the late entries. Yeah, and that's the thing with the late entries, because sometimes if you get in the late entry like this, you all of a sudden want to put your stop loss right here.
Yeah, and then you just summed up like 98% of the traders.
Yeah, then the market knows that, and then they come down and they target your stop loss, and then you're in the right trade, but you're out of the right trade. Yeah, and it's interesting to think about, because when you get taken out there, somebody else took your position from you so they could be in the trade. Right? It's so weird because, like, yeah, there's always a buyer and seller. So we get out of the good trade, but it's like, wait a minute, did someone just take me out that knows it's a good trade? And then it goes up for them, and then we're out all the time. This happens all the time.
Yeah, that's what I'm trying to that's what I've been trying to back test and work on. That's like my main main
Yeah.
issue right there.
One thing I
Just
like
getting
to
the good entries and then missing entries and then second guessing. Like if I have like I don't know, it's like all psychological. I miss it and then it messes with your head and you're like, okay, I just got like you said, you got to treat it like a business. Like you're not just gonna change what you do.
yeah,
A company like McDonald's, like you were saying, or something.
yeah.
Stick to the plan. So,
Yeah, and it's hard because sometimes we'll miss the A plus setup or we'll get stopped out of the A plus setup and then we'll shoot it like a B setup or a D setup.
right.
And like the game is hard enough. Even with a good strategy, maybe your percentage of win rate is only 60%. And that's if you have a decent strategy and you follow it 100%. Then anytime you vary from that, now the win rate is 30%, 40%. And now when you adjust something, all of a sudden the win rate's 20%. So someone's like, why is this not working for me? And it's like, well, all of a sudden you're trading D setups, which are only a 20% risk reward. You cannot make money like that.
Right.
Yeah. I'll show you one thing that I like to do here on I'll just show you on NASDAQ because it's easier to see. NASDAQ really likes to take out stop losses. It's like the master of taking people's stops out. So if I go on like the 30-minute, usually on the 30-minute or the 1 hour, you can easily see the liquidity points. So like right here, you can easily see that when this low is made, because there's none of that later data, you can see that this is an obvious point where people had their stop losses, whoever caught the sell, right? So like people, whatever, maybe they got in here, something like that. They all have their stop losses above this level somewhere. And they're all stoked because they're in this trade. And where are they trying to ride it to? To right here. They're trying to get this whole move because everyone thinks, oh, this imbalance is going to get filled, right? So they're trying to sell. So when you mark up these liquidity points on the 30-minute, it'll really help you. So this always happens. It basically just goes and takes out stop losses, then goes and takes out stop losses, then goes and takes out stop losses. Here's another place that took out a stop loss. Here's another place that took out a stop loss. At the same time, there was also stop losses above this level where people caught the second sell. Yep. Yep. And so you'll watch, it just does that. It just has to go and take stop losses and flip, take stop losses and flip, take stop losses and flip. But we see it on smaller time frames too. Like whenever you see this right here with two candles on like the 30-minute or the 15-minute, that's divergence on the smaller time frame. So somebody had their stop loss above this first candle. They were catching a sell. They had their stop loss above this first candle. They were right. The sell was huge after that. But market comes up first, takes out their stop loss, and then goes down.
Yeah.
Someone caught this sell right here too. Same thing. Someone caught a sell from here. They were right. But the market came up, took out their stop loss, dumped down. And it has to do this. Same thing here. It went up. Someone caught the sell right here. They were in this little bit of profit. Price came back up, whipped them out, dumped down. So when you start training yourself to see this kind of thing, then you'll know, okay, this is where the obvious stops are, and this is where they're going to run for the liquidity. So I use if I can't see it or there's too many highs and lows, I use the fractal indicator. So if you just go Williams fractal on like the 30-minute or the 1 hour, and then just switch it from 2 periods to like 4 or 5 periods, that means it uses 5 candles to give you the swing high or swing low. And so all it's showing you is the main swing high and swing low. So when you get a main swing point like this, you can just mark it off and wait for that area to get swept before you look for your entry.
Okay.
So one thing we notice in the NQ Legacy group is we have, I'm not sure if you're in the NQ Legacy group, but we have a pretty strict like criteria for our setup, and it's like it's on the 15-second chart, but it's like if price does this, then it does this, then it does this, then it does that, we get in. But that whole setup is good, but if that setup plays out on the 15-second chart in an area where it swept liquidity on like the 30-minute, the 1 hour, now that setup becomes very, very good. But even though our setup's good, normally you can't take it in the middle of nowhere or it fails. And this is kind of what I was
15-second entries. How do you get a 15-second entry? What do you look for on that?
on futures. So yeah, we're it's the
Okay.
same style of thing. So we're waiting for the divergence, then we're waiting for other criteria to happen. But a lot of times the pattern, if you just try to trade the 15-second, you'll just get chopped up, right?
Hmm.
Like if you're just staying on the 15-second and you're going to trade divergence everywhere, you're going to get, oh my, you'll be annihilated. So, yeah, and some people think, "Oh, why is the pattern not working?" And I'm telling them because the pattern only works here. This is where you want to see the pattern. Here. These two candles, like that, this is divergence on the lower time frame. This is where you want to look for your divergence. So this is why you want to acknowledge the higher time frames and where the liquidity sweeps are happening, and then get into whether you want to find an entry on the 1 minute or the 15-second. You don't really want to look at that time frame until you're sweeping liquidity or until you're inside a fair value gap. So this is a good example right here. So there was a fair value gap right here on the 30-minute and probably on the 15-minute. Then when you go down to the smaller time frame, this is the divergence you want to see and you want to trade. Not just any divergence on the 1 minute, 3 minute, 5 minute. Forget the divergences on the smaller time frame. They're just going to trap you every time. So this is where you want to see it. The only time I care about the smaller time frames is when we've either swept a higher time frame liquidity level or we've entered a higher time frame fair value gap. Otherwise, I do not care about the 1 minute, the 3 minute, the 15-second, none of it. I don't even want to look at it because it will provide opportunities that look like a good opportunity all day long and they'll just keep taking my money.
You said on which time frames?
If I'm looking on the smaller time frames, if I'm looking at
Okay.
if I'm looking at the 1 minute, the 3 minute, the 5 minute, the 15-second, I don't care about those time frames unless we're in a higher time frame fair value gap or unless we've just swept a higher time frame liquidity pool.
Okay.
But people will just watch the smaller time frames and they'll be like, why isn't this setup working? And it's like you're taking it in the middle of here. You're taking it right here. Look at how many times the price went back and forth. No matter what your strategy is there, if you're entering there on the smaller time frames, you're going to keep getting chopped out.
Okay.
But
Yeah,
they
I'm,
don't.
I'm starting to see it just looking at it right now.
Yeah,
Like
yeah,
the sweeps, it just makes a big move after that on the 30-minute.
yeah, exactly. So you can. I don't know what subscription you have, but you can set your chart up like this on TradingView. So you can have the higher time frame on the left side and the lower time frame on the right side. So this is how I always have my chart set up. This is different right now because we're on the Sunday session. So I don't have my chart the same. The charts are always messed up on the weekend. But yeah, I usually have something like this set up. So I'll have like a smaller time frame that I'm going to enter on the right side, and I'll have a
Mhm.
higher time frame on the left side. And usually on the left side, I'll keep like the 1 hour, the 45-minute, the 4 hour. You can see the liquidity sweeps happen here that we were watching on the 30-minute. You can see them here too. So then when we get below those areas I mark up, like before this is here, you can
Mhm.
mark that line, right? You
Right,
can
right.
mark that line. Yeah, so before it's come up, you can mark that line. And then if all of a sudden now you see, oh, now we're above that line, and now you see divergence on the smaller time frame or whatever your setup entry signal is. Now if you see that, now you're talking. Now you have a chance at making some money. So
Mhm.
this is originally what helped me because people were switching, clicking through time frames like crazy, and the way my brain works and stuff is I'll get too confused and if I just have one chart and I'm clicking through time frames, I'll get too confused or I'll get too zoomed in on a smaller time frame and kind of lose track where I am in the overall structure.
So where would you be at, like, on an entry on this? What are you looking for on this NQ1?
So basically, what I would be doing is exactly that. So if we got to the chart, I host the live stream some days in the NQ Legacy. So I just come on to some time frame, and I want to mark out areas that are important. So if I got on the chart right now, I would say there's obviously stop losses below here because whoever caught these buys, that's where their stop loss is. And maybe they moved their stop losses up to here. And now we know there's also liquidity above here. If
Those
there was
equal
a
highs too, right?
yeah, if there was a fair value gap here, if this wick wasn't that low, I would mark off the gap as well. But since we have no gap, well, it's basically like a tiny little gap under this line. So this line is basically doing the same thing as marking the gap. But until price goes above or below one of those levels, I don't really care what price does.
Right, right.
So you see, there's actually way less times to pay attention to the chart than we think, especially if you watch the 1 minute. Like, you think there's always trades to take and there's always something important. But I'm like the old man trader in the group. I'm like trying to have like a process at a business that's like slow. So I don't care
Yeah,
to.
it's quality over quantity. You take one or two, setups or even one trade a week. That's all you need.
Yeah, exactly, right? And so I'm leaning towards that more and more all the time. I'm like, if I can find the area of interest on the 1 hour, the 45 minute, the 30 minute, something like that, and I can get in there, that's where I want to be at. I'm not trying to be in a position anymore of in and out and in and out and adding on and taking away and overly managing the trade. I'm just like, you know what? Like, sometimes I'll get in a trade. I'll get in on the 1 minute or the 15 second. I'll go watch it on the 15 minute or the 1 hour or like the 30 minute. I'll get in a trade, watch it on the 1 hour. And people, they want to watch it on the 15 second. They want to watch it on the 1 minute. They want to see every oscillation. It's like, dude, if your emotions are strong enough to sit through every oscillation and hold it for a long time, be my guest. But you're probably not emotionally stable enough to watch it on the 1 minute unfold and hold it for the next 4 hours.
Exactly.
Yeah. And anytime there's a deep pullback, you're going to get scared.
Yeah. Gotta get the emotions out of it.
Yeah. So if I'm watching on the 1 hour, so what? I see one candle like this. I see one candle like this, and the bottom of the candle's just doing this. Who cares? I'm not getting scared. Who cares? I'm in a trade, and yeah, my profit's going up and down, but there's just one candle on the 1 hour doing this. It's
Right.
not scary. But when you look at that on the lower time frames, oh my, it is scary because you're seeing it go down like this and make a low and then break the low and then sweep the other low and create short-term structure the other way. And now it's sweeping the low and change of character, change of character. That's why I don't like these change of character indicators and stuff. Half the change of characters are fake change of characters. Why would I want to see something that's telling me fake information half the time?
Right.
I'll be like, oh, there's a change of character. I should get out. And it's not even a real change of character. Like, go a little bit higher time frame. It's nothing. It was just a sweep.
Exactly.
Yeah. So, but yeah, it's all psychological, right? So the more you can get into the charts and be like, okay, who's in a trade right now and celebrating? Whoever's celebrating, that probably would have been me, and my stop loss would probably get targeted. So if there's people in a trade and they're celebrating, where would their stop losses be? And if price goes and takes them out, and I can see it does with the wick, or I can see it takes them out and then presents my entry criteria, I'm looking to get in there. You'll find that will get you in at the extreme ends of the trade too, instead of in the middle of price action, and it's easier to ride that trade to a higher take profit. Yeah, so
I'm gonna start thinking about that now when I'm trading.
yeah,
You're
oh, really.
celebrating. Which one you're celebrating? I'm about to take your position right
Exactly.
now.
Yeah, and throw those smiley faces on the chart, man. It's hilarious. Right when you see them get taken out by a big wick, you're like, oh yeah, I know what's happening here. Look at this trade, for instance, right here. You know there's people that caught trades in here. You know there's people that caught this buy, right?
Yeah.
And maybe they had their stop loss down here.
Right.
But what happens when a trade starts going in your direction and forms a new low? You move the stop loss up to here, right? And then what does price do? Right? It has to. It has to. So that's why a lot of times the guys in the group are talking about intermediate lows and intermediate highs. And I don't really use that term because to me it's kind of like it doesn't really invoke emotion. I call them inside highs or inside lows. So when I say inside low, then it's easier for me to see. And like even the word inducement, I don't call it inducement because that doesn't mean anything to me. I'll call it enticement or seducement. So if you think of it as seducement, then when it's happening, you're like, oh, here it is trying to seduce me in.
Yeah. That's a good way of putting it.
hmm And that's why I'm saying you kind of got to make trading your own, like kind of use your own way of thinking about it, your own analogies, your own way of like going about it. Then you'll find a real business that's unique to you and you can use that for a long time in the future and you can exploit it. If you just totally do what other people do, you can only get as far as other people and most people aren't getting too far.
Right.
But if you find your own way to swing it in your own style and your own terms, that's all any of these guys did. ICT didn't come up with most of this stuff. All he did was take Gann theory and take Wyckoff method and started creating his own versions of it and giving things names. But those were already around. Those were already people's concepts. He was just making them his own and then found a way to make money off it. But yeah, same thing. Whenever you find something out, just save a screenshot of it. Be like, "Oh, look it. There's a time where it swept liquidity, and there's my pattern presenting itself on the smaller time frame, or there's a time that this happened, or there's a time that this happened, or there's a time that I thought this was going to happen."
Or start collecting.
Yeah, yeah, and Telegram is a great way to do that. I don't know if you use Telegram. Do you use Telegram?
Yeah, I have it. Yep.
Yeah, yeah. So go on and just create yourself a new group. And then don't add anyone and just give your group a name like my screenshots or whatever you want to call it. Like maybe you want to call it um,
Trading
Rocky's,
screenshots.
yeah, like Rocky's knowledge or whatever you want, right? And then all of a sudden you'll have a whole collection, like a photo album of things you can go and look at that will imprint that idea in your brain. That's what this game is about. You need to be imprinted with the pattern and imprinted with the scenario. Then when it happens, you'll feel really confident because you're like, oh, this is in my vision in my mind 50 times working out.
Mm-hmm.
And yeah, if you have this trading view subscription to do the 2 time frames like this, really helps. You'll see a lot more of what's going on than just watching it on one time frame and clicking through different time frames.
Right. Okay. Yeah, I do have the monthly subscription, so I should be able to do that.
hmm hmm Yeah, and like some people when they do this, they realize that this trading becomes a lot less stressful because part of what was stressing them out was always clicking around. Did I miss it? Did I see it? Oh, I see it on the 5 minute, but it's not on the 15. On the 15 minutes, an uptrend, but on the 5 minutes, a downtrend. On the 1 minute, it's this, but on the 5 minutes, that. Then they get all this conflicting ideas and they have the cognitive dissonance, which is what we were talking about at the start. They can't make a decision because they have two conflicting things. So I just keep one time frame on the left, don't even change it. If you want to change it, just look up to the higher time frame for a minute, but then go right back down. Basically, just keep 2 time frames and then become a master of those 2 time frames.
Perfect. Oh,
Yeah.
that's the homework we do today now.
Yeah, perfect, bro. But yeah, I'll let you guys go and get back to your day. Does anyone have any more questions or anything?
Yeah, that does it for me. I appreciate your time. Thank you for doing this for
Perfect.
everybody and taking
Yeah,
time
you're
out of
very
your
welcome.
Sunday fun day for us. So we all do appreciate that. So
Perfect. Yeah, much love, man. Yeah, cheers, guys. Thanks so much for joining me today. And yeah, make some notes and get yourself a plan together for what you're gonna do in the coming week, and a lot of what you're not gonna do in the coming week. Because whatever cost you money in the last week, just make sure you don't do that next week.
fail to plan, plan to fail.
Yeah, exactly. It's a real business, guys. I'm telling you. One day you'll make it into a super business, and you'll be like, "Well, I should have done that a long time ago."
Perfect.
Yeah. Much love, guys.
All right. See you later, brother. Thank you.
Yeah. Peace out, bro.
Yeah, have a good one, everyone.
Yeah, you too, guys.